Good morning, everyone. My name is Mark Palladino. I'm a program director for FDC, and I'm very happy to welcome you all for this morning chat and the second session of our masterclasses, which is part of our masterclasses series, part of the digital finance program. This masterclasses and also the program was designed by FDC together with CKGSB, which is Chao Kung School of Business. And we have here Mary she's gonna present you a little bit about Chao Kung School of Business. And this morning, we're gonna have Professor Oliviero Roggi, our specialist in finance and credit risk management. And he invited Gabrielle Sabato for a chat about the credit risk assessment for SME enterprises. So I pass the word to Mary. Good morning to you all. I'll be back later with questions, and please comments. Feel free to make the questions in the comments, and we're gonna have a very nice evening, very nice morning today. Thank you. Mary, please.
Thank you. Thank you, Mark. Yes, I'm the chief representative of Chao Kung Graduate School of Business Americas. We're based, CKGSB Americas, based in New York. And we're very excited to be working with FDC on a series of webinars and also a program, which we're also developing. And just very briefly, for those of you who don't know about Chao Kung, our affiliate, our really related school, which is Chao Kung Graduate School of Business, is based in Beijing. We're one of the leading business schools in China, and we also have campuses in Shanghai and Shenzhen. And very briefly, we're really recognized for three special things. One is that we have a faculty which is truly global, and over 40% of them have received tenure at different schools throughout the United States or Europe or South America or Asia before coming back and joining with CK. And we also are a research school, and we do research, very significant research. We have almost 300 case studies, many of which have not been published. And finally, we have an alumni that is quite outstanding, over 12,000 alumni, and include people like Jack Ma of Alibaba and Tencent's Pony Ma, who founded Tencent. And we put together our wonderful faculty. Some of the FDC faculty is here today, and come up with very creative and we hope interesting and stimulating webinars. And we also hope you'll join us for our program when we announce it. Thank you so much, Mark.
Thank you, Mary. So I present you Professor Oliviero Roggi. He's going to start our conversation this morning. Thank you very much.
Professor. Good morning, everybody, and welcome again to this second masterclass, international masterclass, as a pre-launch of our course, of our program. I'm Oliviero Roggi. I'm Professor of Finance and Risk Management at FDC, and I will introduce you. I will be the moderator today, and I will introduce Gabrielle Sabato. Let me just share with you a quick presentation about him and the today topic. Today we will speak, as Mark already said, about the credit risk assessment to empower SME. And then we ask ourselves how this topic can be related to the fintech industry, and we call it constellation. And in fact, we are normally used to define fintech in terms of companies that use technology to solve problem of the final user, like the payment system, the credit financing. But in this case, it's different. And we will see how the technology and the finance service can be together in order to increase the efficiency of the market, and especially to help the final user, in this case the SME, to empower the growth, to increase the potential growth along the company life. Today I have the honor to host the Gabrielle Sabato, that is the CEO of Wiserfunding Limited. Is a fintech based in London. He will speak about the company itself, but let me just share with you a few information about his CV. Gabriele is Italian, like me, but this is just by chance, no? He's the CEO of Wiserfunding Limited. As I said, he has a wide experience in risk management, and he started to work, and he was several times as a visiting professor and visiting scholar at NYU, where he met Professor Ed Altman, with he founded this fintech that he will speak about. Before to found the Wiserfunding, Gabriele holds several positions in the financial institution industry, like the head of risk appetite portfolio decisioning at Royal Bank of Scotland, NatWest. I was not even remembering this NatWest part. Then he moved to ABN AMRO, that he got familiar with Brazil with the acquisition of Banco Real, and several other positions. He's an expert and was responsible for ICAAP, stress testing, risk modeling. He's an expert of credit risk. And especially back in most than 10 years ago, together with Edward Altman, they understood that the SME market was really needing better instruments in order to help them to get funded by the banks. This is the reason why he's here. He holds a PhD from La Sapienza, University of Roma. And as I told you before, he was several times a visiting scholar at NYU Stern, and this is something that we do share in our curriculum. Gabriele, I don't want to waste time of the today participant in further, so I'll give the floor is yours. I will just stop my presentation, and please, the first question is how and why we do define Wiserfunding fintech, and how you will see yourself in the fintech constellation.
Thank you so much, Oliviero. First of all, let me start by thanking you and everyone else at FDC for inviting me today. It's truly a pleasure. We've been knowing each other for more than 10 years, and I've been always an attendee to your famous risk management conference in Europe. So I'm delighted to have the opportunity now to have this conversation with you on a different channel, a virtual channel. And in particular, in the Brazil context, because in the Brazilian context, as you mentioned, I worked for almost 4 years for ABN AMRO, and I was constantly traveling to Sao Paulo and had the opportunity to visit also the rest of Brazil. That is a wonderful country. And also already 15 years ago, the financial industry in Brazil was extremely advanced, something that really impressed me. Already 15 years ago. So it's truly a pleasure today to be here with you. And talking about Wiserfunding, I think your question is very relevant. First of all, are we a fintech? I guess we're probably a fintech enabler, but I guess the real characteristic of all fintechs is to be lean in their structure. So I think, first of all, if you think about a fintech bank, you probably wouldn't think about having a lot of branches, probably no branches at all. It's probably a digital proposition. So to succeed, a fintech business needs to obviously look very carefully at their cost and outsourcing as much as possible of their function. It's really the secret for the successful fintechs that we see in Europe and across the world, I think. When they lose that vision, that they're getting too close to the old style, the so-called incumbent, traditional banking style. And so obviously risk is probably the main business, as they used to say, of a bank or any financial institution. Outsourcing risk management, and in particular risk assessment, is something that I think is probably the future, because developing models and especially for SMEs is something complex, requires data, requires expertise, it's a lot of cost, and a lot of these new market entrants, let's not forget that fintechs are fairly new market entrants, they don't have the funds, they don't have the data, they don't have the expertise, or it's quite hard for them to find that expertise. So that's where I guess Professor Altman and I, as you mentioned, decided 4 years ago to start our adventure, to provide pretty much everything that we had learned from the academic perspective in many years of research, to provide that, to make it available to the whole fintech industry. And increasingly, we have seen a lot of interest also from the old school, from the incumbent area. So I think in this ecosystem, we place ourselves very well because, you know, every fintech has two aspects, right? The fin and the tech. And what you generally notice is that there is always some sort of imbalance between the two. Some fintech are more fin than tech, and some others are more tech than fin. Now, I don't know where the right balance is. I can tell you, obviously, that Wiserfunding is obviously a little more fin. Everyone at Wiserfunding is specialized in risk management, and we do have now technology that enables us to provide our expertise through the technology. But it's never the technology that is the first element. So as you see in this slide, we have developed now more than 60 models that cover a large part of the world. And that's our fin, our financial expertise. At the same time, to make them work, I think to bring life into the models, we had to develop the technology. And you can see here how our technology is something very common today in the fintech industry, is a cloud-based technology. So everything, all our models or our IP is stored on the cloud. And then we connect to these models, both to feed information and to get our output delivered to our clients. So a really interesting combination. I guess increasingly something that really benefits financial institutions, lenders, bank and non-bank lenders, anyone that has really an interest in helping SME to grow. That's why when we decided the topic, the title of this webinar, I thought it was important to reflect the growth part, because at the end, that's what matters. And I think in Brazil, like in Europe, SMEs are always the one that find it more difficult to access funding. I mean, as you mentioned, we shared some good research on this topic, right? And so I like to think that what we do helps to increase the efficiency of the markets and allocating better funds between lenders and SMEs. So that's, I hope, something that is going to benefit the markets and the SMEs, especially in a moment like the one where we are, where obviously we're going through a global pandemic, and obviously there is now an economic recession, and SMEs will need support, definitely, more than anyone else, to drive the recovery for everyone.
Gabriele, if I well understood, the proposal to the market is we help mainly newcomer and incumbent to better serve the SME, because in better modeling the credit risk, the SME, they can profit in getting more funding from the system. Is it correct, my interpretation? And just to let you know, Brazil is very similar to Italy, for example, in terms of the structure of and the dimension of corporation, where the financial market represents a small part of the GDP created by the country itself. So there is a sort of very, very, very huge granularity of small SME that, unfortunately, in this period of pandemic, they are not able to access to funding due to what? Most of the case, the incumbent is the role of bureaucracy, but in some cases is also a lack of modeling from the banking part to evaluate them correctly. How do you see this evolution of the market recently, and how do you think Wiserfunding can help in the Brazilian market?
Yeah, thanks. Yes, Oliviero, you're absolutely right. We try to, the economists, at your university there are many experts in that field would think about, information asymmetry. And when a market has a very high level of information asymmetry, obviously no one benefits, right? So we, as Wiserfunding, we try to reduce that level of information asymmetry, make the risk profile of companies less opaque. And that's the objective, really. And you mentioned Professor Altman, that we know, both of us, we know very well. He likes to say that we're trying to bring a common language of credit to the market. And that is a very powerful statement, in my opinion, because think about the US. I think whatever you do, you are pretty much, from a risk perspective, really classified as your FICO score. Your FICO score basically almost dictates everything you do. But at the same time, if you have a good FICO score, you can access products, services, lending in a easier way. And that is because there is a common language of credit. Now, we believe that common language of credit has been missing for a long time for SMEs. I mean, this picture here shows you a little bit the market in terms of risk assessment for companies. I mean, on one side, you've got the consumers, then you've got the micro SMEs, then the SMEs in the middle, and the large corporate on the right. So let's basically divide them by turnover. And traditionally, all the most common rating agencies or credit reference agencies, the smaller one, they've been focusing either on micro SME, consumer micro SMEs, or large corporates. The part in the middle, probably the one that most needs really support from a financial perspective, has always been left a little bit underserved for several reasons, not just risk, obviously, even the type of products that or propositions from the financial world were not customized to that part in the middle. And I think only after the 2008 financial crisis, we've actually seen new entrants in the market because of the credit crunch that stopped prevented banks from lending to SMEs. We've seen new entrants in the market going specifically after that segment in the middle. And obviously, they need tools. They need tools if they want to do a good job. And that's where Wiserfunding can support them just there in the middle. And I think, again, this is part of what, obviously, for example, the program at your university will help to understand better how to look at the fintech ecosystem. Fintech is not just one thing, it's not just lending or payments, it's a completely different philosophy. So it's innovation and digital. And this can be brought in so many different things and aspects of our life. But behind all that, there needs to be the ability to process a large amount of data. Increasingly, data is behind everything we do. And there are new sources of data that are made available, open banking, so ability to share your current account information, your accounting information, and all that, that need to be processed. And when that is done in an efficient way, again, everyone can benefit, getting things faster and potentially at a better price.
Gabrielle, this is bring me to another question. I mean, you define different from some players that they normally are more in the retail markets, and you are different from the big rating agency. How different you are in technology? Which is the technology you were just mentioning, the importance of data, the data science is getting now in your job. How different is and how you apply technology at Wiserfunding in order to better serve the SME. And the next question is also how you customize it, you tailor the solution in order to adjust to the market peculiarity, like Brazil that has a very special regulation on lending, has a very strict control of central banks on any lending activities, has control of foreign investments, has control of capital inflow and outflow. So it's a very peculiar economy in terms of in terms of financing and financial in general. Thank you.
Yeah, absolutely. Yes, Oliviero. I think that is really the most important point, because obviously we differ from others in this space, not just because we have chosen to focus on SMEs, but also because everything we have developed is specific to SMEs. And in particular, I think the model and the technology. Let me start from the models. I mean, our models, obviously, we like to say, there is a legacy that is very important to all of us. That is the one, obviously, from the original Z-score, the first scoring model in the world that was developed by Professor Altman in 1968. That model, very simple, five financial ratios, still widely used today. Like, you can find it in Bloomberg, you can find it in Reuters, and many companies out there still use that model. And that model, probably, in my opinion, one of the biggest strengths was the simplicity. So we wanted to bring the simplicity in everything we were doing, but at the same time, innovate what our models would look like. So as you see on this slide, our models have a 3-module structure. Each module reflects pretty much everything that any credit analyst would look at when assessing the credit risk of an SME. The difference here is that we do it in a standardized way, in an unbiased way. There is no human intervention, so it's unbiased. It's just machine processing data. And obviously, that's what gives us the result. So the 3 modules look at the financial history of the firm, the corporate governance, and the macroeconomic context in which the company operates. Amazing. As you know, every time statisticians develop models, they tend to just focus on their prediction accuracy. The higher the prediction accuracy, the better. That's true from a statistical perspective. But if you want to have models that can be used in practice in the real world, you also need to factor another element that is extremely important. How are you going to get that input? Because, obviously we can put any sort of variables into model, what's the exit strategy for a company. But how are we going to get that information real time? It's a different story. So as you see here, for us, the technology enables us to feed these 3 modules real time. And that is the innovation. So right now, we can just input a company name, a company number on our platform, and the technology would retrieve the inputs that we need, more than 60 different inputs for the different modules, real time. And within 8 seconds, we would be able to provide you with basically our score, the probability of default, the loss given default, and the bond rating. So that is the smart way. That's really the innovation, the way we use technology, including artificial intelligence, to help us feeding the models real time. Something that before, obviously, a credit analyst would take probably days to retrieve all these inputs and then process them manually and then feed them into a model and get a response. Now we do it in a few seconds. I think that is the benefit of the technology. And that is wonderful, I think, when you can see how technology and finance get together to benefit everyone. So this is a typical example.
And then here, we know, expert knows how difficult it is to manage and to mix financial data from SME that are quite not opaque, as you said, because due to the fact that the accountancy rules are not so sophisticated for them, together with corporate governance variable that up to like 10, 15 years ago were impossible to collect it because there were no artificial intelligence in order to transform this huge amount of qualitative data into quantitative variable to be inserted into the modeling. This is really an innovation that, in this case, the technology allowed you to do this, because this 15 years ago, 20 years ago, when we started to write about it, it was even impossible to predict. No,
absolutely. That's exactly the point. You could possibly think that these variables were fantastic and very predictive for your models, but you did not really have the ability to put that in practice because there was no way to get that information in your model real time or in an automated way. And so that brings me to your second question. How do we customize this per country? Well, obviously, every model is specific per country. As you know, SMEs are very different by country, by industry. So all these are segmented for us. And then module 2 and module 3, so the qualitative and the macroeconomic, obviously are specific to the country where we operate. As you suggest, there are things that, if we look at SMEs in Brazil, are obviously very different from SMEs in Italy, how they file the accounts, any negative or positive press coverage about them, presence on the social media. All these elements are very country specific. And so that is the way we customize the models, by basically taking into account these country specific factors and returning then a consistent output. Because again, that is the most important. You may customize the inputs, but the output needs to be consistent so that we achieve what we said at the beginning, a common language of credit.
I'd like I missed something to say before, and say the participant can write on the YouTube the question that I will ask at the end during the Q&A in the final minutes of this conference. Also, we will have a representative from Chowcon directly making the conclusion, Michelle. Okay. Let's go to the next question, and it's a question that is a bit on your perspective on how the fintech industry will evolve in the next and in the long-term future. How do you see fintech evolution?
Yeah, well, that's a very good question. I think, to be honest, I believe fintech is just starting. Obviously, that's very different by country, right, Oliviero? I mean, potentially, I see Europe this time slightly more advanced than the US, and the rest of the world catching up. To work fintech needs data. So this is the thing, like the digital channel, you don't have like, if you needed a loan, if you were a company and needed a loan before, you would go to your branch, you would know your branch manager, you would probably in Italy go for a coffee or a lunch. That doesn't exist anymore. And, I think if we had to really find a positive aspect of this terrible pandemic, we could say that probably has helped us to accelerate a little bit that digitalization, right? We see a lot with, working from home, remote, virtual channels like this one, developing a lot faster than before. And I think for this to happen, obviously, you don't have that human touch anymore. You need to base your decisions on data. And so I think we're getting better and better in different fields to analyze data, to process data quickly, and to take decisions based on the data quickly. And I go back to the point, like in Europe now, open banking, so the ability to access current account information from people is a reality. And the same accounting software integration, so you can access accounting software of companies real time. There are so many different data points and companies that provide APIs from where that you can use to source social media information or anything else that you want. This is amazing because this obviously enables fintech to grow faster. And that's, I think, what we're all seeing. This market is growing. And I mean, there would be bumps. We see that, as I mentioned before, when a fintech lose a little bit traction of what is really the business model and grows the cost too quickly, then obviously the business model is not going to work anymore. So I think, we need to see exactly how this different fintech business model will develop. But slowly, I see that the direction is the one of an incredible growth. Going to the question, I don't know if you were planning to ask me, but like, will ever fintech become more successful than incumbents? I think that's a difficult one. A lot of the new challenger banks, fintech banks, are still struggling. We see the data all the time. They have wonderful proposition. Many say wonderful colors, UI on the web and apps. But again, like in every fintech, the tech needs to be backed by a strong fin, by a strong financial expertise. That's why courses like the one that the MasterClass and the course that you give at your university are very important for whoever is thinking to get closer to the fintech world, because it's not just tech, and tech alone will not deliver the results. So I hopefully, we'll see that improving going forward. I see a lot in the market, a better understanding of how important is finance in the fintech world.
Sorry, I wasn't on with mic. Technology sometimes is also an obstacle. And this is one of the questions that I will ask you later on. But I mean, you were saying something very interesting about the digital acceleration we had during this pandemic. And we saw it that I mean, all corporation, doesn't matter the size, they have been forced to move into a more digital frame world. I mean, first to keep going with the production of their goods and services, mainly service companies, they have been doing this a lot. And so the digital transformation is really a hot topic now and is going on finally. I mean, it's something that we have been teaching for like 10 years now is happening. And you said also that you are not sure that the true fintech can make it in the sense of can really able to serve the user better than the incumbent in the long term. But in some cases, like the crowd financing and other kind of industry where the credit crunch was really a big problem. How do you see the impact of fintech?
Well, again, I think the impact is going to be positive, Oliviero, because obviously it's bringing innovation into pretty much every aspect of what we do. I go back, I think, to the point of the business model. So a fintech cannot just offer everything for free, thinking that one day then we'll find a way to monetize their business proposition. Because, and we see examples.
This was true during the bubble, in the .com bubble.
Exactly.
That already burst. No, so
exactly.
I mean,
exactly.
a click-through methodology from McKinsey that bring many investors to the poverty, no? Back in the years. We are old enough in order to remember that bubble. Yeah, sorry to interrupt you.
Absolutely. No. And so I think fintech needs to find a way to build their competitive advantage that cannot be just technology, because the incumbents have got more money, have got more funds, have got bigger shoulders, and they will catch up on technology. Inevitably they will catch up on technology. So if they want to succeed, it's about finding a competitive advantage. Could be a niche, could be a specific product, something that really innovates also from a financial perspective, what they're trying to do. It's a little bit like for us at Wiserfunding. I mean, you may say, look, I mean, looks like a pretty crowded market, out there in terms of rating agencies, in terms of credit reference agencies that have been around for more than 100 years. Yes, I agree. So that's why also for us, it is important to find a competitive advantage, a niche, something that makes us different in our business proposition compared to the others. And that cannot just be technology, because again, everyone else on that slide will catch up on technology fairly quickly. So it cannot just be technology.
Can be the agility of fintech the competitive advantage, because I'm an incumbent. Normally is a huge corporation where decision making is very structured, innovation is separate from the corporation itself. In fintech, those things are all together. I mean, we live in an environment in which innovation happens and is applied immediately. So it might be the speediness of the application of the solution, of the new solution, a key element for the success?
Yes, totally. I would totally agree. And actually, this is not just for fintech. I think now talking about, the future, hopefully the recovery after this, terrible pandemic and the economic
the new normal
that exactly that is we are in. I think SMEs have a competitive advantage now. That is the agility, exactly what you mentioned. So for once, I think they have the advantage of having a leaner structure, lower fixed cost, and the ability to adapt faster than incumbents, faster than larger corporates. So again, in my opinion, that is an advantage now that SMEs have, and they should use this opportunity to take market shares. You mentioned the new normal. I've seen here in London, where I live, I've seen 70% of the restaurants closing down during the lockdown. But I've also seen 30% of them putting out all the stuff they had downstairs, and they used to cook their lunch or dinners for their clients, and putting that outside and started to sell that. And actually managing not just to keep open, but probably increase and keep customers around them. And so that is the way to adapt. That is what I believe will be, defining success towards failure inevitably in the next few months.
We are about to finish. We have 15 more minutes. I want to open a little bit the floor to the participant. And I have a first question that mainly we already answered, but I think maybe you want to add something on the second part. Daniel Pareras is asking, how do you see the challenges for the future of fintech, and which are the hardest obstacle to overcome? I mean, then there is another one on regulation. I mean, first of all, you can from the technical.
I think they're probably related. I think, as I mentioned before, opportunities are huge, and they all derive of the ability of building a financial expertise, building a strong financial proposition rather than relying just on tech and new tech. But I think in terms of obstacle is also regulation. So regulation is one of these that I think most of the fintech, tend to believe, I'll deal with that later. But, that cannot be the case, because many times it's going to be too late. And when the regulator comes in, it's generally too late. That affects reputation and potentially affects also, the P&L, because you may get a fine and a lot of troubles. And the trust, again, let's go back. I mean, we both come from a country where traditionally, people were used to go to the branch just to take money out of the bank, and they didn't even trust the ATM. So the trust is a extremely important factor for the development of fintechs. And so let's all of us in the world of fintech should not underestimate the importance of regulation, and to respond to regulation in the right way.
And this is bring me to another question that I had from the floor, and is and also to an aspect that is really part of the content in our program, that is the differentiation in the regulation. How do you see the different continental bloc to evolve in regulating the industry of fintech? Because this, meaning Europe, North Americas, and Latin Americas, if you know something about. I know that through you have friends here that they work in fintech, so maybe you want to answer about the Brazilian environment too. But here is really crucial to see how the regulation or the regulator will operate. We remember that in the North America there are 29 agencies that they regulate a single bank. So I mean, just to see what is the back office of replying or to be compliant with the financial regulation, it's a huge problem. And there are also fintech that they want to solve this problem of being compliant to the regulation worldwide. How do you see the three different blocks in terms of the evolution of regulation? Because more regulation means less agile adjustment, and less regulation means more risk for the final user.
Absolutely. Yeah, no, that's a great question. Again, I think one of the benefits of fintechs today is that could be truly global, right? We've seen a lot of examples, including Wiserfunding. I mean, it's easy to scale up and move into different geographies. And we've seen examples of different, fintechs moving, starting in Germany and moving to different countries very quickly in Europe and even outside. Pretty much all of them, when they started in Europe, now they moved to the US. But the reality, as you just mentioned, is that the regulation is very different, and the requirements are very different. There is no harmonization, although the market is global. Technology it makes it very global. Unfortunately, rules are very different, and we have to. Every day, even in Wiserfunding, I mean, there are GDPR rules that apply to Europe, but even within Europe now, UK is not really Europe, or is it? I don't know. I mean, because of Brexit, and then you've got obviously different rules in the US and in South America. So unfortunately, I don't think that regulators are going at the same speed as technology and finance. And that's probably difficult, right? Because they move very quickly. But at the same time, obviously, we need to see some harmonization. It doesn't necessarily mean less regulation, as you were suggesting. That could be risky, but some harmonization across rules in different continents, that would be extremely helpful for fintechs to grow even faster.
I have another question from the floor that is about the newcomer, the retailers. I mean, big retailers being newcomers especially in the payment system, fintech industry. Do you know and how this trend will evolve, and have you somehow consult any corporation that needs modeling? Because I mean, they are very good, they have a lot of data about their customers, but they don't know how to build credit risk modeling. There is a trend on this, and how Wiserfunding is helping, for example, retailers. In UK you have Tesco. Here we have Extra, that is a French corporation. We have Pan de Azúcar. They are big retailers, mainly in food distribution.
Yeah, absolutely. Yeah, no, I think again another great question. I think supply chain is extremely interesting area for us because a lot of especially in this moment, you want to understand very carefully the quality of your suppliers, and you want to understand it, on a fairly regular basis, because what we are seeing pretty much across the world is that obviously a lot of small companies are not surviving at the moment, and all the manufacturers have fairly tight production cycles. And so obviously having one of your major suppliers defaulting is going to affect significantly your production. So systems like the one we have can really help to understand better the quality, monitor the quality of suppliers and clients in case you decide to offer some form of credit. That is generally now something quite interesting. We've seen like Klarna just acquired by Amex in Europe, a big important move, I think, into that space. And then obviously you've got the Amazon model. I mean, Amazon is probably one of the fastest growing lender to SMEs in Europe because they've got the data. I mean, they obviously have got the best data in the world, right? No one of us has got that data. They know exactly how much each one of their sellers is selling, growing, not growing on a daily basis. And they found a way to process this data in a very optimal way. So obviously that is a very interesting model. One that I would say, if I were at the top of traditional bank would worry me a lot more than the one of fintech banks that have just a pretty UI.
Thank you, Gabriele. I think let me check if there is any other question from the ground. Otherwise, I will ask Mark to come back to give us some information about the third webinar that is offered from JOCON and FDC as a pre-launch of this program that I'm sure that all of you would like to enroll for. I mean, this is all the topics that Gabriele was raising here, I mean, are deeply treated in the course that is happening for now virtual, but it will be also based on the different campus that the two universities are offering. Mark, the floor is yours. I would like, first of all, before to pass the floor to Mark, to thank Gabriele and Ed Altman for accepting to be here with us today. And I'm sure that we will see Wiserfunding Brazil soon as a main provider of credit risk modeling for SME. We are really in the phase in which SME needs support, and the FDC was always very careful to the SME world. We do hold a program called PAEX, that is the Programa de Excelência, that has the aim to develop the SME, to bring them to in a journey of growth that is sustainable. This is our goal and is our commitment. Mark, thank you, Gabriele, again.
Thank you,
Oliviero. Pleasure to see you, to share with you this seminar, and to have the insights that are very relevant to all the people that are assisting now. Thank you.
Thank you, Professor, and thank you, Gabriele, for accepting the invitation. It was a very, very nice and rich conversation about this exciting world of digital finance and the fintechs. And I would like to thank, on behalf of FDC, of all the participants. And I also would like to tell you that on September 24th, we're going to have the third session of our MasterClass series with Professor Bruno Diniz. And also, he's going to invite the VP of Banco Inter, which is, it used to be a fintech. Now it's getting to be a very strong bank in Brazil. And they're going to discuss a little bit about the trends and the challenges for the sector and for the digital finance world. And also, please check on the chat that you have on YouTube, the links, if you want to know more about our program of digital finance, that Professor Oliviero is also part of the coordination of the program. And we'll be very glad to have you also in our programming hour with us this morning. And thank you again. Thank you, Gabriele. Thank you, Oliviero, and all our technical support, and especially you, the participants. Hope to see you again on September 24th. Okay, thank you very much. Have a nice day.